Moving now to the south of Kenya, we chat to Moremi Marwa, who is CEO of Tanzania Securities, for a look at developments on the Dar es Salaam stock exchange. Good morning, Moremi. Inflation is an issue there, and I see that the inflation rate has come down by 1.5 percentage points. In August, it was 14.9%, 13.5%. That's quite a dramatic move. Do you see further reductions in the interest rate at this kind of rate?
Yeah, we do expect that. As you said, we have seen a significant drop between August and September, and this was mainly resulted from a decline in food, which contributes about 51% in the weighted CPI basket. And we saw that decreasing from almost 18% to 16%, though on the non-food inflation we have seen it increasing by 0.2%. So it's been good, and given the good and favorable weather that we tend to see, the food inflation will keep on improving, and also energy, because we depend a lot on hydro in terms of generating power. So the better the weather conditions, then the better in terms of inflation, and then interest rates, which we have seen since beginning of the year. That has been a challenge when it comes to interest rates, value of money, and also yields and returns that you receive on both money market, fixed income, and equities. So it's a bit of a challenge.
Yeah, well, I was going to say, money market and fixed income, most investors in most jurisdictions, they're not accustomed to such big moves in inflation. It can have quite a dramatic impact on asset allocation, on the equities that you buy, given which companies might be exposed to higher or lower inflation. So what are we seeing with movements of money as a result of this interest rate shift?
Most of the money is now sitting with especially long-term government bonds. That's where most of the pensions, insurance companies, and large clients are putting their money in there. So, and it's somehow also retail investors. So the shift has been more on the long-term fixed income compared to money market, which are FDRs and treasury bills. And also a small portion has been going on equities, but not that much, because if you look year to date, the Dar es Salaam Stock Exchange Index has grown by 12%. Now, if you take the inflation, which is 13.5, as we saw in September, the net return that an investor can get is probably negative. So we have seen a more shift of asset allocation towards the fixed income and mainly long-term.
Moremi, if you're looking at some of the shares on the stock exchange, the Dar es Salaam exchange, CRDB Bank, Tanzania Tea Pickers, DCB Commercial Bank, Precision Air, all of them down. What's been driving that? Is it related to some of the issues you've been talking about?
Not that much about that, except on the DCB as a bank and being a lender, and given the squeeze on the liquidity as a result of inflation, then they had a challenge when it came to lending. Business could not borrow as much as we expected. It affected most of the banks, CRDB as well, because their quarterly financials indicate that almost, not only quarterly, almost half a year, their net lending has been almost without growth. Now, as a business without lending, the banking business is a challenge in there, and this is a result of the liquidity squeeze that we saw the government take the tightened monetary stance when it came to inflation and also stabilizing the shilling. But for these other counters, it's more of their fundamental performances, which has not been what investors will expect. Fuel gases, they have not been performing. Last year, they took some measures to mitigate that by they did a total shake-up of their top management, and now things are improving. They came with their strategic plan, a turnaround plan, and it's working. We have seen it working, and this year they expect to start making some good money. Precision Air, they have almost 60% of the airline industry here. However, they are largely leveraged, so their finance cost is high, and there's zero that they pay to dividends to investors as dividends. And as a result, that's the reason that the demand on those counters has not been forthcoming, and hence non-performing in almost, and also non-active in most of those counters that you have just mentioned.